It can be. And that's why inventory counts are so important. You need to know how much is you're losing to theft or breakage. Sometimes things just break, but you need to know how much. And if it's substantial, then you have to review all your processes. So that's kind of the next part of the physical reality check that we talk about. That needs to happen towards the end of December, early January, is really looking at your processes. How did you perform during the busy season if December was your busy season? We typically do that review in May. I do that review because my busy season is January to April. So in May, I do kind of a review of what went wrong, what caused me too much stress, and what do we need to fix so that it doesn't cause the same problems next year. You also got to get prepped for January if you're a retail business. We have to deal with the return rush, which is going to be happening, and the gift card usage that always becomes kind of a problem. We also talk a little bit about the staff hangover in this episode. If you have a retail business, your staff is wiped after Christmas. You got to give them a little bit of a break. And Calvin explained a little bit to us about a term I'd never heard, which is called the hot wash debrief. Apparently in the Army, they just break everything on purpose to see what broke, and then that way they know that what needs to be fixed. And then after you kind of do that physical check, you need to be working on your financials. So end of the year financials, the books got to get closed, and we have some important deadlines coming up. January 15th is the final estimated tax payment due. January 31st, you got your W-2s and 1099s. March 16th is the S-Corp and partnership deadlines, and then April 15th is the C-Corp and personal tax deadlines. So we talk a little bit about both that physical and kind of financial checks that you got to do at the end of the year, so please check out the episode. And then you got to plan for your year-end spending before the end of the year. I always get questions about what should we spend at the year end, and this is a conversation you need to have with your accountant, and you need to make sure you got your financials up to date. And sort of our last thing that we threw out there, kind of what we do every episode, is a task. Pull the vendor list and confirm all W-9s are on file that you need. So anyone you paid over $600, you got to send a 1099 to. $600 for labor, not for goods. You got to send a 1099 to, and you really want to make sure that you have all of the W-9s before the end of the year, because January 31st comes quick and your accountant gets annoyed when you don't have all the W-9s.
Is January 31st the deadline for that?
For 1099s to go out, yep.
Okay.
Yeah, and it's always a rush, me trying to get all of them together. So if you bring them all to me at the end of the year, yours go out first and you're in compliance. But if I'm missing one or missing two, we end up delaying before we send them out. You don't want to send them out late. You can get a penalty. So one other thing before we jump into questions that I'm real excited for us to announce. We're going to get it up on the Reddit and all across all our social medias, but we're going to have a business plan competition with Turtlesmith.
Yeah, I've been looking forward to that for a while.
Yeah, so the next a few months, I think we're going to have deadline for submission March 31st. You submit your business plan to us, and the winner is going to get $1,000 to help start their business.
Hey, a lot of great businesses have started on a lot less.
We're also going to offer two, if you want it, to the winner. We're happy to help provide some mentorship, some options to help get you further funding. Not coming from us. We're not committing to putting any money out, but we'll help you go through the SBA process, or I can even maybe get it out to some investors and stuff like that if it's a good enough idea. So get us your business plans. We're real excited for it.
Yeah, I mean, if I'd have had you around when I started, then I might not have needed you now.
Yeah, there you go.
I might be funding a whole accounting department somewhere.
Yeah.
I want to remind you and everybody else out there as well that right about now you should be seeing a nice little subscribe button pop up on your screen. In order to get information and even be qualified for that business plan contest, you must be a subscriber to the Turtlesmith YouTube page.
Yes. Yeah, please do. And
The
all
very
that,
minimum.
Yeah, all that information will be up on our website too, turtlesmith.com, and we're going to post it across all of our social media. So it should be great. I'm really excited to look at some good business plans.
Yeah, I think that would be awesome, and so always need to see people's ideas and see if they can put it coherently. And if you need help to learn how to write a good business plan, please go back to our season 1. Go to our webpage.
We have all the information for how to develop a business plan.
Yeah, we have put in a lot of work on that. There are a lot of places out there that will talk about how to write a business plan. We devoted almost a whole season to it.
Mm-hmm. Yeah, and I kind of developed a method that works for me. It might not work for everybody else, but a nice little step-by-step method that works to develop a business plan. So
Yeah.
hopefully it works for you guys too. And one more little caveat to that is when we get all of the submissions, we're going to select 3 potential winners, and each one of those winners is going to do a pitch on live if we can get it all set up.
Yeah, we will.
So hopefully we'll be able to hear the pitches live, which will be super fun, and then we will select a winner live on the air.
That's going to be a lot of fun.
I'm
and
excited for it.
it's going to be even more fun too to see if the winner or some of the finalists, if they end up actually going for it and making a business, and we can track that.
I sure hope they'll let us. Yeah, it'll be super fun. Well, let's jump into some questions. I don't know if viewers have any questions for us. Do we have any ready to go?
What is the best way to track expenses?
Accounting software is the absolute best way to track your expenses and your income. QuickBooks is kind of the go-to for most small businesses. It's affordable and it's robust. You can also get a couple of cheaper ones that are free. I've never used one, but I hear good things about Xero, I think it is, Xero. I've also heard some okay things about the Quicken stuff, but QuickBooks is what we use here, and it's what like 95% of my clients use.
Let me ask you this. I was using Mint for a while. I realized they've been, I guess, deactivated. They bought by QuickBooks or something. But one of the things with Mint that I liked was that I could put all of my cards on there and everything. So anytime I had expenses, it would automatically assign, once it started to learn, what those expenses were, it would assign it, whether it was a personal expense or a business expense, and categorize it accordingly. And that could be brought into QuickBooks. Does QuickBooks do that now?
QuickBooks Online does. It connects very well with all of your bank accounts and your credit card accounts, and you can kind of go through setting that up and categorizing everything, and it does learn, and then you can include and exclude stuff. You need to learn how to use QuickBooks. There's a bunch of different stuff, and we are going to have some lessons eventually on our Patreon page, which will have some courses on how to do that. It's only $5. There'll be a bunch of great content, but it's really just to help pay for new content to come out.
So right now, when I go around and I'm just buying stuff and I use the card for this or that or whatever, do you get that brought in automatically through the bank account, or through? Does it automatically ingest that and then help categorize it, or do you basically categorize that manually?
I categorize your stuff manually, and we
Okay.
do that for a lot of clients because I don't. QuickBooks Online is great for one person to be using, but I have hundreds of clients, and I can do double the work on QuickBooks Desktop that I can online. The online version, it takes a little while for stuff to buffer and load and stuff like that. I spend more of my time staring at the little buffer screen.
Right. Well,
than
I
doing
was going to
actual
say,
work.
when I tried to use it, and this is why you would want to get somebody who knows what they're doing, right? When I tried to use it myself, I quickly became confused, and I think I caused like a lot of double entries to happen and
Yep.
things like that, right?
Yeah.
And I mistakenly thought I was making a lot more money than I was.
The one more thing to say on that before I think we'll have some more questions is if you are uncomfortable using accounting software, you can always hire a bookkeeper like me or my firm or hundreds of other people out there. Just find somebody that's qualified and good. The other thing that you can do that's very simple is you can try to use Excel. If you're a little bit good with pivot tables and that kind of stuff, you can make a really quality expense list throughout the year, provided that you don't have way too many transactions. If you do have a lot of transactions, accounting software is really the only way to go.
There are also, I believe, and correct me if I'm wrong, but I believe there are some decent apps out there now where you just take a photo of the receipt.
They do okay.
And
They can do okay. But again, it's you got to put the effort and time into it to really do good no matter what. So
I highly recommend hiring somebody like Scott. My life has gotten so much easier in that regard. Now I just spend, and he tells me whether I've spent too much or not.
yeah. And you can find offshore bookkeepers, people who work overseas for pretty cheap. You can find people in town that work for pretty cheap, or you can come to people like us who do a lot more than just bookkeeping. We do all the taxes and payroll and everything, and that's really the
I'll tell you
simplest.
honestly, I don't think that I would want to trust my finances to someone who I wouldn't be able to sit down and talk to.
Well, some of them do well, and they're cheap. So you just got to find somebody that's good with good reviews and good ratings, and just be careful. So.
Well, the other thing about cheap though, okay? I mean, this is just the way I feel about it. if you try to go too cheap, you got to remember that some of this stuff is putting you in a legal responsibility.
Mhm.
So regardless of whatever gets reported, if the bookkeeper or the accountant didn't account for things correctly, you're the one that gets the liability, not them.
That when I say doing the overseas bookkeeping, just mean for the day-to-day bookkeeping.
Yeah, right.
Your accountant at the end of the year will review and make sure everything's accurate.
Good.
So,
Okay.
what's our next question, Dylan?
In your opinion, is it good to burn cash at the end of the year to reduce taxes, or save cash for the first quarter for a seasonal business that has low business in the winter?
So that's a good question. When I talk to my clients about this, I'm usually a little bit more conservative at the end of the year with burning cash. Absolutely, you should buy things that you need. Absolutely, you should try to get assets that will help that you can depreciate. That especially sometimes if you get them on financing or something like that, you don't lose all your cash and you still get the deduction. But it's a little bit of a game. You do not want to just unnecessarily spend cash in order to try to completely avoid taxes. I have so many clients that come in and they spend as much money as possible. They try to write a bunch of checks dated December 31st so that everything is done on that day to try to maximize their end of year expenses. And then in the first couple parts of the month, the first couple of months, they're broke. So you really have to do what's called a 13-week rolling forecast for your cash flow. We have an example of how to do that, and I talk about it further in the courses, which we're going to be going out here in the next couple months. But you can look it up, 13-week cash flow forecast. If you kind of do that for your business, you can judge your cash, where it is, and how it kind of goes up and down as your expenses and income come throughout that first quarter. And you can see at the end of that quarter what your projected cash would be. That would be safer if you have that number to kind of spend that amount before the end of the year. And that way you still have enough to cover all those first few month expenses.
Is there a certain kind of balance, or does it kind of depend on each unique situation, where someone might want to invest in a piece of equipment or something like that to instead of paying tax? So like we talked about this before, right? And some of the things that I ask you, should I do this or should I do that? You were like, well, you could do that, but it's really not going to save you that much. People have this idea that when you spend money, it's 100% right. I hate that term. It's a write-off, 100% write-off on your taxes. So they think if you spend $100, then your taxes are reduced by 100.
Well, yeah. So when we say 100% write-off, when you buy like a piece of a piece of equipment that's an asset, we can 100% write off the value. But if let's say 50,000 is taking off your taxable income, that's what that does. It reduces your taxable income. It doesn't reduce the taxes dollar for dollar. So if you spend like 50,000, it might only lower the taxes 10,000.
Right. That's what I was getting at is that's something people don't really realize.
Right.
Another one that I hear all the time is, people say, why don't you sponsor this or that, right? And you're going to get 100% write off your taxes for sponsoring it, right? And then we had this discussion, and I'm like, okay, if I give away a pool cue case that's worth say $500, do I get $500 off my taxes as a donation, right?
You just get what you paid for.
You get what you paid for it, right? You get what the item cost you to acquire.
Right. As a tax accountant, it can be a little bit infuriating when clients come the last few weeks of the year and they're just like, I need to spend some money so I don't pay taxes. Your tax planning needs to happen throughout the year. And so for you, I just naturally do it because you're a monthly client. We do it all year. So I plan for, what's March looking like, what's June. We try to plan out some big acquisitions. Like we bought a building for you this year, big acquisition. So those are the thoughts that you need to have. You need to have these planning sessions with your accountant in April for the current year, in June or July, in September and August, not 2 weeks before the end of the year. So to answer the question though directly, if you have some things that you need to spend, I would suggest spending the money if you can buy some stuff. Inventory doesn't count because that sits on your balance sheet. Assets may or may not be depreciated. So double check that they're actual deductions that you're able to take. Spend a little bit to reduce the taxable income on things you really need. Don't just spend frivolously. And then, but really pay attention to the cash that you're going to need with that 13-week rolling forecast that we talked about. Try to plan out what your cash budget's needs are for the first part of the year. But you want to do everything you can to minimize your taxes. Just don't go overboard.
There you go.
Next question.
Selling crafts on Etsy versus selling from your own personal website or using services like Shopify. What's the best route to go or for a small business?
So this might be a little bit up
Yeah, I
your
was going to
alley.
say, I'll take that one. So part of it is going to depend on the amount of reach that you can get through your own website versus a platform like Etsy. Etsy is going to have, millions of visitors every day that are typing in and looking for things, and Etsy will be using their algorithms to kind of recommend things to people. So there's a possibility that you could tap into a larger audience there. Now, the drawback is twofold. One is Etsy's going to take a percentage out of your sales. So if your item can't command a price that allows you to pay Etsy and still make a profit, you may not want to do that, because you could sell a lot on Etsy and end up not making very much money. The other thing that I have seen to be a big problem on platforms like Etsy, and Etsy especially, is crafters will get on there, they will create some kind of really cool new thing, and then within a month or so you'll start to see it show up being made by other sellers, and some of these are institutional manufacturers that are basically pretending to be small crafters.
They're ripping off the ideas.
And they're just ripping off the ideas, and Etsy really doesn't have any protection for that. So that's a big issue. As for Shopify, Shopify is an e-commerce platform. They're just basically a store front, and they have a lot of good tools to promote that. They may have some social media tools and some SEO tools that would help you to get some visibility. But they are not necessarily a social media type situation like Etsy is.
Right.
But you definitely should have your own website.
Yeah, no matter what.
Okay? No matter what, you want to have your own website. Now, your own website could be a Shopify store that acts as your website, where you can put up you can put up pages and information that are not directly tied to the sale of the item. But I just had this conversation last night with a guy who came out with a pool cue case stand with wheels. And actually, he did a really good job on it. I was fairly impressed. And his flyer that he left in my building wouldn't sell anything. It's horrible. It's a black case with a black stand on it on a grainy black and white photo.
Yeah.
Nobody would buy this thing based off of that. So I had to have a conversation with him for about a half an hour or so to explain to him how to market himself on social media. So having your own website, extremely important. You get full control of it. You get to say what you want to say. You get to set it up how you want. And you can do things like you can tie into things like PayPal. PayPal has a way to itemize items, and you can just put a link right up on your website. You can embed the code. So you can have sales of your item, and PayPal will handle the transaction, for example. But it'll all be on your own website.
So if I can just throw in my 2 cents from a financial perspective, your profit margin and level of control is going to be much better on your own website. Absolutely. You're going to have more control over it. You're going to make more money if you sell everything just from your own website. Shopify is a tool that can integrate with your website.
Correct.
to help manage that a little bit better, but it's not its own little store, right?
No. Shopify has
go
their.
search?
You can
Okay.
you can create a Shopify store,
Gotcha.
which is a web. It's basically an e-commerce website builder.
Right. But if you're just getting started into that kind of craft space, it's probably going to be more cost efficient and a little bit better to just start on Etsy and then eventually build out your own website. Unless you have the funds and you have the social media drive and the customers, it's going to be much better to do your own website in that aspect.
Well, I would.
And I think you have both at the same
right.
time.
I would slightly disagree with that because of the potential for getting knocked off.
Fair enough.
because it happens very quickly on a platform like Etsy, because the knockoff artists are watching what's happening there as well.
Fair enough. But you can also still get knocked off using your own website.
You can, but it's going to be far less, visible, because you're not jumping right into the space where they're all gathered.
Okay. So
Now-
so let me ask you then, what's our advice on this one? It's a little bit nebulous, but I think
My advice
is it the website or do both?
My advice is to use social media sites like Facebook and YouTube to promote the fact that you exist, show off your stuff, tell a story, show yourself building it, whatever you got to do, to
Showing
that sort of
yourself
stuff.
building it is the coolest, I think.
Right. And basically tell your story and develop some fans, right? And then you direct the fans to your website. And then the engine that powers your sales can be Shopify, or it can be it can be PayPal. They've got excellent tools that will do that. You'll pay a little percentage. But you will not be showing off your stuff like on Amazon or Etsy or any similar type of marketplace, because all those places exist to do really is to extract as much fees from you as they can, and they don't care who they get the fees from. So if you get knocked off by 3 other companies,
They don't care.
you started doing great, you started getting some popularity, and you're starting to feel good about yourself. And then a week later, you see basically your items plastered all over other people's Etsy stores.
All right.
Then you're going to feel like shit. But, beyond that, you're probably going to lose revenue because nobody's going to know who the original was.
All right. So we're saying Etsy is not a great deal. Maybe
That's
don't
what
do
I
it.
say.
Okay.
I would
I love
never,
it.
I would never ever put my stuff up on Etsy.
I love it. I like the website and social media idea. And I especially like when you're doing social media, if you kind of show how you created the product and like packaging videos and stuff. We've talked about that before. Really cool stuff.
And if you put any of that on Etsy, your competitors will steal that as well, and then claim that they'll claim it's them.
That's true. What, we got another question?
When you do your year-end stuff, do you run it cash or accrual? And do you make any adjustments before calling it good?
That's a you.
Most businesses, small businesses, are done on a cash basis because it's easier. It connects with the bank statement. Taxes are done on cash basis. Accounting can be done just fine on cash basis. There is no question, though, that accrual accounting and doing all of your books on accrual and filing your tax return on accrual is better. It's much better for everything. It's helpful to spend more money at the year end. It gives you a better, clearer financial picture of how you're doing because you're recording transactions when they happen, when you make the sale, when you incur the expense, rather than when it just comes out of your bank account. But accrual is much harder to do. You have to have a good qualified accountant to properly do the accrual, or you need to learn how to do it yourself. QuickBooks Online, QuickBooks Desktop have a lot of tools to help you do proper accrual accounting, but it's harder. It takes more work and you really have to pay attention. For example, just a bill that you get, you have to enter it as a bill and then you have to pay it as a bill. But when you do it at cash basis, you just have to enter it when you pay it. So there's 2 transactions for every one thing that happens when you do accrual. And that's just a simple matter. And then you have to think about, too, the cash flow statement becomes much more important in accrual. So it can you have to look at where your cash is based on what's all happening. So almost all businesses that we deal with, I would say 95%, 96% even, close to 99 probably, do cash. I do very few accrual-based tax returns and accrual-based accounting for small businesses because it's just too difficult. But if you are qualified and can do it yourself, or if you are big enough to hire a firm like mine to do it, then accrual, absolutely the best way.
Okay.
Hands down.
I have nothing to say about that. Thank you for doing whatever it is you do for us, whatever method you use.
Yeah. We got another one?
Yes. The no tax on overtime and tips start January 1st. Is there anything we need to do now, or is that all handled next year?
So it should all be handled next year. To be honest with you, I haven't read up on everything on exactly how it's going to happen. It's my understanding that when you get your W-2, The wages will be separated so that you'll just have your base wages, and the tips have another category on the W-2 form, and that those won't be taxed on the tax return. So I haven't quite got too far into that. I'm falling behind the curve. I need to learn a little bit more, but it's my understanding that as an employee, you won't have to do anything. All of it will be reported on your pay stub accurately, and you won't have to stress about anything when you go to file your taxes. And they should be, if you filled out your W-4 form correctly, they should be withholding the correct federal and state withholding to match just the wages that are going to be taxed.
What do employees need to know about that, though? They're going to have to like read up on it and figure out, make sure that things are being done right for them, right?
Yes. You should learn a little bit about it. And in fact, that brings up a good point. And I apologize, we're not going to be able to answer every single thing perfectly on air. I will make a note to double check those rules, and we will put out a Facebook post and put it on our Reddit and put it into the next episode where we have a little bit of a talk about exactly what those rules are and what an employee needs to be aware of.
Excellent.
We'll go through all that. But yeah, it's my understanding that servers and stuff on the tips, Trump promised it, and so they're not going to be taxed on them. You know, we'll see what happens. I think you're still going to be subject to FICA taxes, which is Social Security and Medicare, but hopefully not federal income.
I think there's some sort of rule on that. Like it's no taxes on tips after a certain amount or something or whatever.
Right.
But yeah, but I mean, it's definitely going to be a little bit of a help. I remember when I was a server, we were always trying to balance, what we report, what we don't, and you had to report, I believe, a minimum of 15% of whatever your tabs were for the night. That's what you were taxed on, whether you made that or not.
Right.
Right. So that was always a thing.
We will have much more information on that. In fact, I'll make a point to talk about it. Next week's live, we'll just open the show talking about that, and we will have all the information that you could need.
Excellent.
Another question?
What else we got?
That's it?
That's it? Nobody else got anything?
Well, thank you so much for all the great questions.
All right.
We super appreciate y'all. Come back next week and check our socials for the updates on the business plan competition. And check us at turtlesmith.com, at turtlesmithok on all our socials. And come back next week and ask more questions.
All right. We'll see y'all next week. Have a good one. Merry Christmas.
I'm Scott Hess, tax and business consultant.
I'm John Barton, small business owner. Remember the tortoise and the hare? Slow and steady wins the race.
We started Turtlesmith to help people start small businesses, providing information and resources to small business owners and entrepreneurs.
Build a solid foundation and forge your dreams.